Well, a fabulous day for the entire market. I think it's worth thinking back over the last few turbulent weeks and asking ourselves what's been rallying consistently throughout this period, because that's a sign of strength. And that brings me to La Quinta Holdings, the select service hotel chain with 870 locations under La Quinta Inn and Suites, La Quinta Inn, and LQ hotel brands. Now, La Quinta was taken public by Blackstone just over a year ago, and despite opening down on its first day of trading, which is classically a sign of something good in this market, the stock's been steadily gaining ground ever since. It's now up almost 44% from its IPO price of 17 when no one wanted it. In fact, La Quinta hit a brand new all-time high last Thursday, the day after the company reported a strong quarter, delivering inline earnings and better than expected revenues. But what really impressed were the key metrics for the hotel industry, like revenue per available room. That was up an astounding 8.2% year over year. Occupancy rate up 233 basis points. Plus, the company gave robust guidance, raising its revenue per available room and EBITDA forecast. The thing I've always liked about La Quinta is that it's a growth hotel chain that's using franchise deals to expand rapidly all over the country, while also moving into select regions of Latin America like Chile, Honduras. Of course, the stock has run at these levels, up more than 8% since we spoke to the CEO last in February, and that's giving us a nearly 20% gain since I first recommended January 20th. Can it keep climbing? Let's take a closer look with Wayne Goldberg, President and CEO of La Quinta Holdings, get a better sense of where his company's headed. Mr. Goldberg, welcome back to Mad Money.
Glad to be here.
Wayne, I got to tell you, when I spoke to you last, everybody was so worried about oil and gas going down in price. You reassured people. I read the research. So many of these guys chose to doubt you. It turned out to be a tailwind that gasoline was down, wasn't it? Not a headwind.
Well, again, we had a very nice first quarter, as you said, 8.2% RevPAR, 233 basis points in occupancy, 4.3% in rate. We posted a very strong quarter with 11.7% pro forma adjusted EBITDA growth, and net income increased 23.6%. We opened 5 hotels. We grew our pipeline from 207 to 211 properties, and we signed some really significant deals in high barrier to entry, high ADR, urban central business district properties, Chelsea, Manhattan. We signed Miami Midtown, and we signed Santiago, Chile. We also signed Oklahoma City Bricktown, and we opened our first hotel, as you mentioned, in Honduras, in Tegucigalpa, the capital of Honduras.
Wayne, I got to ask you. I mean, because I'm not cool enough to even walk by Chelsea. I mean, my daughter works in Chelsea. La Quinta in Chelsea, why does that work?
Well, again, it's about price value, and there's a reason the consumers have migrated to our segment. It doesn't matter whether you're in suburbia or you're in the middle of Manhattan. It's about price value, and we, in our segment and our brand, we deliver value to our consumer. It's the reason our consumers have migrated to this segment, and it's also the reason investors and our franchise partners have migrated to this segment. It's because that's where the returns on their investment are. But it's all about delivering value to the consumer, regardless of where you are.
Now, you still have a chance to be able to do even better, right? Because occupancy rates, which are high for you, but could still go even higher as people find out the bargain that you are.
Well, we will continue to grow this brand. We feel very good about the outlook and the horizon. We have a lot of momentum. We've been the fastest growing select serve brand, according to data provided by Smith Travel Research, the last 10 years. And we continue to have opportunities domestically and internationally to grow our brand. And I believe we'll continue to do so.
You've been paying down debt. You've been making a lot of money. You got that great franchise model. What will you do when you finally reach those leverage targets? What's the additional dollar going to go to?
Well, and as you said, since the IPO, we've paid off $275 million of our debt, $260 million of which has been voluntary. And what we've said very publicly is when we get below 4 times, we will determine what the appropriate return of capital is to our shareholders, whether it's a dividend, whether it's a share repurchase, and those levers that help us continue to grow the brand, keep the brand fresh, vibrant, and growing and relevant.
Okay. When I looked at, we've been doing a lot of stuff with technology and who is technology, who's not. We met with an outfit called Hotel Tonight last week in San Francisco. Any of these kind of services that fill up rooms at the last minute, do they have appeal to you?
Well, again, we want to make sure that we're visible wherever our consumer's booking, and we work very hard to make sure we're available where the eyeballs are, and then we work very hard to migrate those consumers once they come to us from one of those channels to our proprietary channel. Because the price is always the same. The consumer always gets the best price on LQ.com. But we want to be available wherever the consumer is, and then we want to help them understand why there is benefit for them to book direct.
Right. I own a piece of it in Wayne, to Barry and Summit, and I do something I think maybe I want to know if it's the right thing to do and whether you do it. Do you check TripAdvisor to see how your places are doing?
Well, actually, we were one of the first brands, if not the first brand, to put TripAdvisor reviews on every one of our pages for our properties. So every one of our properties have the TripAdvisor reviews front and center. We believe it makes us better. The consumers are going there. I do go there, and I know our consumers go there, and we decided to give it to them up front. And if anything, that makes us better. It makes us pay better attention and more focused on making sure we're delivering for the consumers day in and day out at every hotel.
Okay, last question I need to know. There are a lot of people who moved away from your group because oil seems to have bottomed and is now going back up. Should we really just be playing this game of 10 cents gasoline and how that impacts La Quinta?
Well, we saw very strong demand in travel in that peak leisure season from Florida and Arizona, Southern California, and those real leisure drive markets. We see a record number of people driving in the United States, which I think was just put out by AAA, 3 trillion miles. We see some real positive outlooks for this peak summer season for travel. You know, the majority of our businesses drive too. So we feel very good. A lot of folks are driving and that a lower gas price is still a net tailwind, not a headwind for our business.
Well, I got to tell you, I think your stock goes higher. You've done a remarkable job, and I know that you are never satisfied, and it can go even higher still. Wayne Goldberg, La Quinta Holdings President and CEO. Thank you so much for being on the show, Wayne.
Thank you. Glad to be here.
Sometimes you get these stocks, they come public. No one's focused on them. They're focused on the highest flyers. And this is the kind of company that delivers and delivers and delivers. And I think it'll continue to do so. Mad Money's back after the break. Booyah! Jim Cramer here from Mad Money. Thanks for watching CNBC on YouTube. Click here to subscribe and get the jump on my exclusives with CEOs. Plus, market news, investing advice, and a whole lot more.